is the next company that we're looking at post the Q1 numbers. Revenues and margins came in below estimates. The India growth was strong at 17% sequentially. The US business was weaker than expected this time around. V.S. Mani, the Executive Director and the Global CFO of Glenmark Pharma, is with us. And my colleague, Ekta Batra, is also will be joining in. Ekta, over to you.
Hi, Rima. Thanks for that. Well, yes, Mr. Mani, I wanted to start with the margin picture because that came in at around 15%. Estimates were at least around 17% this quarter. Give us a sense in terms of what exactly the US price pressure looked like. Did that weigh on margins? And the input cost, because we just heard the management of Aurobindo on their conference call indicate that there is some amount of softness which has come through.
Sure. So I'll take this in a couple of parts. So first and foremost, our margins, while it came at about 15.5%, and we also gave a guidance to the street that there was this COVID drugs write down of about 40 odd crores. And if you had to, take that one-off out, we would still be at about 17%. So all in all, I think it was a reasonable quarter considering some of the challenges. Also, in terms of, for the full year, we still feel that last 2 years we've been at about 19%. We should be pretty close to those numbers. And this overall, in terms of the pressures on the input costs, they are there because of short-term issues and some of the geopolitical issues. But during the year, obviously, we hope some of these taper off. Assuming those things happen, we should see our margins pretty close to what we are trying to indicate. Okay. And as far as the US market goes, obviously, depending on the portfolio, everybody have got some kind of price pressures. And normally it's at about high single digits. But this quarter also there were, because of some of the supply chain disruptions as well as some geopolitical issues. Obviously, I think going forward we should be able to kind of do a better job in terms of getting our sales up.
Okay, so you're sticking by that exit run rate for FY23 in terms of margins, similar to what you did in FY22, around 18 to 19%. $86 million is what you generated in terms of sales from North America. Give us a quarterly run rate going forward, because the street was anticipating at least around $95 to $100 million. So what are we anticipating for the next couple of quarters?
So that's my sort of response to that, is that obviously there was, and obviously price pressures are always there, but also there were some supply chain distributions, as I said, due to basically the overall geopolitical situation, as well as some other challenges in terms of logistics, etc. So obviously those weighed down on that. We are hoping to end the year at very close at the flat growth or a small single-digit growth compared to last year. So, that's how we look at it. And we have 10 to 12 launches coming up during the course of this year. So I think all this should help us to reach at least where we closed last year.
Okay. India has grown around 17% Q on Q. Your consumer segment has also done quite well. Give us a sense in terms of where exactly India is headed. What is the kind of, opportunity that you see, especially even in chronic segments such as diabetes?
Yeah. So, India has been doing well for us for quite some time. We've been among the fastest growing company over the years, and that's why we improved our ranks. So if I were to look at India, obviously last year in the first quarter, there was a large bunch of COVID sales, but net of that, even in July, if you look at it, as per AWACS, our growth is almost 16%, and at IQVIA, we're about 10%. So we see the year, at a strong growth of about mid-teens, happening during the year. So India is really a good thing that's happening. And across segments, we improved our ranking also. If you look at our cardiac, we used to be at about 6th. We have now reached 5th. Okay, so therefore we are improving on that segment. Derma, we continue to remain at 2nd. So some of these we have done quite well. And obviously on the consumer care sector, there have been a number of good product launches also. So those have helped us to actually do well. This quarter was really very high growth, but we continue to hope that the growth can be sustained, or we hope to have a good growth in the quarters going forward.
Okay, you did have a out-licensing agreement just a couple of months back. You are still guiding for 1 to 2 in FY23. Where does that stand? Because that always is, a little difficult to assess that whether or not that's eventually going to go through because of how, successful the molecule or the NCE is. So currently, where do you stand in terms of the 1 to 2 licensing agreements which you've guided for?
So you're absolutely right. This is something difficult to assess. Obviously, we are having a number of data points coming out on some of the key targets that we're working on, especially 1342, 1442. So I think we are hoping that by the end of this year, before the end of this year, we should have at least one deal done. Okay, so we're still very optimistic about that.
What's your thought on your balance sheet, Mr. Mani? You know, almost 3,800 crores of debt. You had indicated earlier in the past that free cash flow generation has been your priority for FY23. So this year, what's the kind of FCF generation that you target? And by the end of this year, where would your debt stand at?
So first, I would like to address this. So in the first quarter, we ended the debt at about 3,765. And this broadly went up largely on account of basically the currency move. Okay, so rupee moved up from 75.50 to almost 78.5. So that's the reason. Also in this quarter, we had refinanced some of our FCCBs. Okay, so obviously while we had accrued the premiums over the years, there was a one-time big number that we paid off in this quarter. So I think going forward in this year, we should definitely see a decent reduction in our debt. Would not like to put a number to that, but I think like it should be decent. Okay, we hope that's what we're working towards.
Okay, Ichnos, you had guided that maybe there's a possibility that you could, have some kind of strategic sale, some kind of fundraising on the cards. That was maybe around 2 years ago. Where does that stand? Is that still a plan which is on the cards?
For Ichnos, definitely. So obviously, we are waiting for these data points to come out. If we could do a licensing deal as well as some of these data points come in, then there is definitely a good opportunity to do a strategic, kind of something that will help us to kind of capital raise out there. And that's been our endeavor.
Okay, just a quick last.
If you can recollect, last year in one of our other subsidiaries, we were pretty successful as far as GLS went. Yeah. We did a IPO and that was okay. So I think going forward in Ichnos also, we're hoping that these data points come out well and we're able to do a licensing deal. And on the back of that, we should be able to kind of do a capital raise.
Okay, I just had one quick last question, Mr. Mani. What is the possibility of revising this guidance on the upward for your revenue growth? 6 to 8% is what you're assuming. You did stick to your FY22 guidance of double-digit growth. But 6 to 8%, can we expect a revision on the upside at any point through the year?
I would definitely be conservative and also see, while the first quarter we had it's a negative 6%, but there were a lot of COVID sales last year, as you are aware. And net of that, what we have guided is that it was a 10% growth. So we would say in the next 3 quarters, if we grow at these levels, we should be able to get to 6 to 8%. And we'll currently hold on to that number.
Mr. Mani, just on the US pricing scenario, we did hear Aurobindo also indicate that this quarter was in fact better and last quarter was quite severe for most companies when it came to US pricing pressure. You have indicated that it was tough for you this quarter. In terms of what you are seeing in the US as of now, when it comes to price pressure, what can you guide for? What is the industry facing? Are companies still exiting products which are unprofitable?
So I think, it's a very good question. So obviously the portfolio plays a big role in this. So even when we look at the pricing pressures, whatever, it is a portfolio that plays. So for us in this quarter, as I said earlier, it was a higher single-digit price pressures, and most of the competitors feel the same. Okay, the peer segments all feel the same. And as far as the year goes by, because of 10 to 12 further launches that may come during the course of the year, I mean, we hoping that the price pressures will always be there. At least we'll be able to kind of get a single-digit growth compared to last year, or at best, or at least do a flat sales, compared to last year.